Hi everybody, welcome back to Succeed in Finance. Today we are going to see one simple strategy that you can use when trading on stocks, indexes, CFD, forex or whatever you are trading for. It's a simple strategy, but it's very interesting and very profitable. I promise you it's gonna be interesting, so stay to the end of this video. Okay, let's get started. So if you have watched my previous video on the 22nd of May, when we were discussing this scenario on the Dow Jones Industrial Average and the S&P 500, we discussed that most probably we've seen at that moment an impulsive way, after which it was there was a corrective triple wave. In other words, 1, 2, 3, 4, 5 A, B, C correction. So once such a pattern is finished, it's a very good point that we can start our trading in order to participate in the next huge movement in the direction of the prevailing trend at this moment. So this is an example of this trading. So let me put here how it looks, my trading. So here it is. Let me transfer here. I think this way is more seeable. So once we get back above my favorite moving average, simple moving average 89 period, here is the opening position. There was a bit hesitation. Actually the perfect signal was right here after the closing above the moving average 89. But anyway, meanwhile there was some other consideration here, because it was broken the previous resistance at this level, right at about this is S&P 500, right a little bit above 2950 at S&P 500. So here is the opening of the position. Once we've opened the position, what we are doing? At first we have to wait. We see here there was some retracement, in other words checking if the signal is correct. But once this is over, the prices started to move up. In other words, we start to profit from our position. So what I want to stress here in this trading strategy, right here, what happened? Let's see. Once we have entered a position, we have to have some kind of plan where we can get out of the position. So let's see here what happened at this moment. The relative strength index went above the overbought level and then getting back. Okay, but it was this entire movement is not enough in comparison with this entire movement starting from the this uptrend from the end of March. So entering into this position, our plan is to participate in something with relatively equal to something like this, you know. So what we are doing here at this moment, we are not obliged to close the entire position, but we are doing the next thing. We can close only half of the position. In this way, what we are doing, we are getting into our pocket some profit, but on the other hand we are leaving part of the position to gather more profit for us if the market, because at this moment we don't know what's going to happen. And we, in this action, half of the position we are cashing out, and half of the position we are leaving to increase our profit from this opened position. We are doing these things, two things. The first, we are going to be more confident, because once we've gathered some profit from the market, we are going to feel more comfortable. On the other hand, we know the next thing that we can do is to move our stop loss from somewhere around here. We can move it to the 0 point. In other words, at the level where we have entered into the market. So from this moment on, when we are doing this, first we are closing half of the position and we are moving the stop loss at the level that we have entered into the market. We know from now on, we know that we cannot lose any money. We have get some profit from our opened position, but on the other hand, we are leaving this position to grow together with the market, because we expect this to grow more. So this is what is happening over this period from the 26th of May until the 10th of June. The market was up. There was a huge uptrend. So what is happening here? We can see above, we can see again our leading indicator that we are using just for sentiment of the market, relative strength index. What is happening here? With from higher above the level 70, actually the RSI reached 81 point. This is a high above high in the level of overbought territory, and getting back from there, it is a potential signal for selling. And this is a moment where we can say, okay, it's time to get out of this position, to cash out our money from this trading. So this is what we are doing. But again, we are not obliged to close the entire position, because we don't know what is going to happen. We didn't know that at this moment the market could make just a short correction and then to go higher above this level. We didn't know what's going to happen. And again, we are not obliged to close the entire position, so we are closing just part of the position. For example, we may halve it. We may close half of the opened position so far. So we are closing half of the position, and the other part we are moving a little bit above the end, above the level that we have entered into the market. This is what happened. So we are doing once, taking profit here, taking profit. We see this huge. The first, this is the bigger profit. This is I'm sorry. Here is the shorter profit. But these both positions, we have gathered some money from the market, and moving the stop loss at a little bit above zero level, even if, when the market didn't move again up, our position, the entire position was closed by the stop loss, we are getting out from the market on a plus, on a huge plus. So this is one simple strategy that can save you a lot of hesitation, a lot of nervousness, anxious. You know, it's very important when you are trading on the financial markets to be confident and to avoid in any scenarios to feel yourself in losing money. Okay, thank you guys. I hope you found value in this video. Please hit the like button, subscribe to the channel, and see you in the next video. Take care.